It's time for our quarterly dividend growth update video. And as the title stated, SCHD got stripped of its crown in Q1 of 2025. Your first thought should be, who did it? Was it VIG or was it Dgro? Neither. It was VYM?
Say that again?
SCHD still is the head lion in this pride of incredible dividend ETFs, but that doesn't stop the others from jockeying for position. In this video, we'll get into all the key metrics heading into the second quarter of 2025. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please pulverize that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind. And check out the pinned comment below if you'd like to try Snowball Analytics or Seeking Alpha Premium for free. I highly recommend both. You know what time it is. Let's grow. Methodology recap. I think it's important to understand how these passively managed ETFs work behind the scenes before making a purchasing decision. This will provide context for the key metrics that we'll hop into in the next section. And we'll keep this section short and sweet since we do have 4 of these ETFs to cover, but you'll want to dive deeper into the specific methodology for the ETF that you decide to roll with. Let's hop over my screens to cover the basics. All 4 of these ETFs pull US companies only, and they exclude REITs. And this is something that I like about all 4 of these because all the dividends are qualified and they are taxed favorably compared to ordinary dividends. And we'll start with SCHD. It pulls companies that have paid a dividend for 10 consecutive years, not necessarily grown it, just paid a dividend for 10 years. And then they have to have a market cap of over 500 million, which is easy, and an average daily trading volume of 2 million. And then all the surviving companies are sorted in descending order by yield, and only the top half are eligible for scoring. So what it does is it ranks and scores them on 4 categories equally. We have free cash flow to total debt ratio, the dividend yield, return on equity, and the 5-year dividend growth rate. I like the balance with these 4 metrics to pull quality companies that also pay and grow their dividends. And now moving over to VIG, it uses a lot simpler methodology. It starts with US companies that have 10 consecutive years of dividend growth, so not only paid dividends, but grown them each of the last 10 years. And then it excludes the top 25% of the highest yielders to try to avoid yield traps. So unlike SCHD, which kept the top 50% within its screening, VIG excludes the top 25%. And then Dgro pulls companies that have 5 consecutive years of dividend growth. So much like VIG, it requires a growth each year, but it's only 5 years instead of 10. And it also requires the payout ratio to be under 75%. I like that for dividend safety and sustainability. And they must have a positive earning consensus moving forward as well. And then at that point, Dgro only excludes the top 10% of highest yielding. So similar methodology to VIG, but it doesn't knock out quite as many of the high yielders. And then VYM is a lot different than Dgro and VIG. And it's pretty simple. It starts with companies that have paid a dividend within the past 12 months and that are also forecasted to pay future dividends in the next 12 months. So it looks 1 year back and 1 year forward to ensure that dividends are being paid. And then it ranks by the forecasted dividend yield, and the top half are selected. So similar to SCHD within its methodology, it takes the top half, the 50% of companies with the highest yield, a bit opposite of Dgro and VIG. I think when you take a look at those, you can understand now why Dgro and VIG, generally speaking, grow their dividend better than VYM, and why VYM has a higher yield. That's the methodology for these 4 ETFs at a very high level. I recommend diving deeper, but it's just nice to get an idea of what we're buying. Let's find out what these things have been doing. First quarter key metrics. It's time to get into our quarterly detailed comparison of SCHD, Dgro, VIG, and VYM. And I know there are many other solid ETFs out there. In fact, feel free to drop any of your suggestions in the comments down below. I select the 4 we have because they've been around for 10 years, they have expense ratios of under 10 basis points, and they produce an attractive mix of yield, dividend growth, and total returns. Please make sure any suggested ETFs follow these guidelines. I'm not looking for covered called ETFs in this series. Let's see how things shook out after the impressive first quarter dividend payments.
I've pulled up my dividend growth history spreadsheet, which is out there for free if you ever want to check it out. It's in the link of the description below with a whole bunch of other spreadsheets. And you can see we're looking at the first quarter dividend in 2025. And I have these, you can change these and this will update dynamically. And real quick before we dive in, I want to jump down to this current yield table. So what I do on this spreadsheet, and there's data tabs for all these to populate them, and I started this to audit Seeking Alpha because it was giving some funky numbers here and there. So I manually calculate all the CAGRs and double check it, and it's been better lately. But normally after a dividend's paid, I just put the yield here. So this is the yield that it was paying at the time in late March for basically all these, that it paid its quarterly dividend. But I put this in here because the market has been so volatile that it's gone down, and most of these have shot up by a pretty good percentage. It's currently April 19th as I record this on Saturday on a weekend after Good Friday, so the market wasn't open yesterday. But as of recording, you can see Schd is actually at a 4.1% yield, VIG is 1.93, Dgro is nearly 2.4, and VYM is up over 3 at 3.05. So when you look at these yields, you know, this is what it was at the time of the payments. And I like to keep that for historical accuracy because as you change these numbers, this will update along with all the CAGRs at the time. So I just wanted to point that out. I'm sure I'll get corrected by a couple keyboard warriors. And I am aware that the yields are higher as of right now, most likely when you're actually seeing this video. But speaking of yield, just looking at what it was at the time of payments, you could see that Schd is the highest by quite a bit, and then VYM's comfortably second, and then DGR third, and VIG fourth. They have a nice little spread over each one. And yield is incredibly important because of the eighth wonder of the world, compound interest. Dividend growth is king, but you gotta start with the yield high enough to pay the bills, so they both come into play. Now, here's that quarter over quarter. This is strictly assessing this year's first quarter dividend that just happened against last year's first quarter dividend for 2024. And as you can see here, we'll just sort as we go. VYM, very strange, was by far and away the king with a nearly 30% quarter over quarter dividend growth. You gotta give credit where credit's due. And then Schd and VIG just had incredible growth as well. Easily an all-time high by percentage for a first quarter payment for Schd. And I haven't looked at VIG as thoroughly, but I would imagine that's the case as well. But then strangely, Dgro was 0.1%. It was flat. And I gotta say, if all of these were under 6, 7, 8%, and this one was here, it wouldn't stick out so much, but just seeing the second worst being at 22%, it's just mind-boggling. It makes me wonder what happened with Dgro. Usually it and VIG, and you'll see as we look over, are pretty similar on CAGRs. But just looking over the last 1 year, and what this does is it takes the last 4 dividend payments, all 4 quarters, versus the 4 dividend payments from a year before that. So it's a full year versus a full year. Schd is up 16.69%. Very nice. VIG is right there at 10%. That's solid. VYM is actually second place. I don't know that I've seen that at 8%. And Dgro, for whatever reason, it's only up 4% in the last year. So let's zoom it out and give Dgro a chance here. In the last 3 years, Schd is still the king at a consistent 11.26%. Dgro sniffs 9% here, and VIG, although lower than Dgro, I would argue it's the winner with a very nice 7.69%, and VYM with a competitive 6%. This really boosted its overall performance. These were in the 4s last quarter. And then moving over to the 5-year CAGR, Schd is barely the king. Interesting. 11.44%. VIG is up over 11. That's incredible for 5 years. That's a long time to sustain a growth. And remember, it's an annual growth. CAGR, compound annual growth rate, of over 11%. So you compare this to your raise or to inflation. Dgro, an impressive 7.62%, but quite a bit behind its peer. And then VYM, they're at a solid 6%. And now on this 10-year CAGR, and Dgro can only look back to a 9-year CAGR. It has existed for 10 years, but it doesn't have the full look back period for the 10-year CAGR quite yet. It's almost there, actually. Next quarter or the quarter after, I believe, if memory serves. But for now, it's the 9-year, which is close enough. ETF. SCHD is at 11.3. I mean, look at this. This is unbelievable, the consistency here. DGRO is at a very solid 9%, quite a bit ahead of VIG at 7.54. So despite the weirdness lately, DGRO is still very solid when we zoom it out a decade. And VYM, you know, I've been talking a lot of smack about this one. I gotta say, is at an impressive 6.5%. You're crushing inflation there. And what I do here on the average CAGR, I'm gonna resort these by power. On the average CAGR, I just average the 1, 3, 5, and 10 year. I don't do quarter over quarter because it can admittedly be spiky up and down because we're only doing one payment versus the full year of payments with these ones. So on the average CAGR, SCHDs is at 12.67. VIG is still number 2 at 9.05. DGRO at a very imbalanced and kind of all over the map compared to its normal performance, 7.5. And then VYM at what I believe is the best I've seen it since I've been tracking, nearly 7%. And now the dividend power is just a nerdy stat that I made because I was tired of not giving love to yield. I love these growth rates, but you gotta look at yield too. And so this just adds the average CAGR to the yield. And SCHD is just smashing them at 16.4%. VIG up there at 11. DGRO, it's funny, it usually wins this because the CAGRs are about the same and the yield gives it the kicker, but man, it's really struggling by comparison at 9.7. And VYM gets a little boost from its higher yield at 9.5%. It almost moved out of the caboose for the first time ever since I've been tracking. So we've looked at dividend yields, we've looked at dividend growth rate, and if you remember, we have a trifecta of dividend yield, dividend growth rate, and total returns. Can't forget about those. And I'll start on what I consider the most meaningful total return because we're in this for the long haul and things go up and down. But when we zoom out, we can see that SCHD has 163% return. Not bad, but it's only ahead of VYM, which is at 137%. And then you have these two, man. These two brothers are always fighting with each other. DGRO has the slight edge here at 175 to 174, and it's almost exactly one that it's ahead by. And then I always throw VU, the market, in here just to see, and as we know, it's been a growth decade. But you can see that these ones are getting a little chippy, a little feisty. They're sniffing the returns of VU. They've been catching up lately, these higher value plays. So VU's still king, but it's not always that way. Remember, value has won over the last 100 years. Don't get too cocky if you're a growth only guy. Yeah, it makes you look really good, past performance on paper right now, but we are in some troubling times, so I still recommend a balance, as I always say. And then we also usually take a look at the 5-year here, and wow, this is really close. So we have SCHD at 82, DGRO is just ahead of it at 82, VIG falls behind a little, VYM, interesting, right there with SCHD and DGRO. That's really impressive over 5 years. Value's made a nice little run here lately. And then VU, the market, still has a lead, but again, it's not as vast as it's been. Now, I normally don't go beyond this because I don't want to make this video 97 minutes. But I just want to look back to show something here. You know, barring VU, we've seen that these holdings are pretty similar when we zoom out, and then SCHD definitely has the CAGR with the dividends and the yield as we saw. So I'd say it's, you know, a great value dividend growth holding to pair with growth ETFs. And you might want one of these two, DGRO or VIG, if you only have one holding. Best to pair with a growth ETF would be SCHD. I feel like that's fairly objective. And then best hybrid solution for one size fits all, these lower yielding, higher growth, more tech oriented ones. But what I want to do here is zoom back to 3 years, and we can see SCHD has been horrible compared to its peers. Same when we go back 1 year. Okay, it's a little closer here, but it's been rough for SCHD. And then year to date, it's down just a touch more. And you can see the market here is down even more. But my point is, if you started investing 3 years ago, you might look at SCHD and say, geez, this is trash. You know, give me a money market or something. Give me a treasury ladder or whatever, something like that. But really, we know that things balance out over time as we saw. And I think this is a great comparative buying opportunity for SCHD. And it shows in its PE, and I don't have them on the top of my head. SCHD, I believe, is in the high 14s right now. And these ones are closer to 20. And again, this isn't perfect. This is just me shooting from the hip. But SCHD is definitely the value value play right now. It always is, but even more proportionally. Energy's been beaten up and the reconstitution grabbed some energy, although it had a heck of the last 2 days in the market. Dgro, I think, is the highest in financials, and these are just distributed different, financials and tech. So again, I'm not one to time the market. Everyone knows that I stick to my target allocations. But if you're just getting into some dividend ETFs, in addition to your core funds like VTI or VU or your growth stuff, I genuinely think SCHD is a great buy right now. It's very beaten up.
I think all 4 of these ETFs are looking pretty good in this volatile market. Closing thoughts. I've made it no secret on this channel that I prefer SCHD because of its more expanded methodology that looks deeper than just the dividend stats. It consistently selects high-value companies with lower PE ratios and clean balance sheets. But I also say this as someone that holds quality growth ETFs on the other side of my portfolio. SCHD is a great fit for me, but it doesn't guarantee the best results in a vacuum. VIG and Dgro have provided great performance with their simple methodology. They are solid hybrid funds that include more growth than something like SCHD. The best one for you will really depend on what you're going for, but all 4 of these provide a better value tilt than core holdings like VU or VTI. This will likely turn out to be helpful in the wild market we're going through right now with the high volatility and the self-inflicted pain. But, as I've preached in all of my videos, this market's no different than all markets that I talk about, where I like a nice balance of value and growth within my portfolio. If you stick to your target allocations, you'll buy growth when it's crushed, or you'll buy value when growth is going to the moon. But either way, you're getting that juicy comparative dip to keep that portfolio in balance as you dollar cost average in. It's smart to buy that dip on autopilot instead of trusting our guts to make the right call because, well, we know how that goes. Stay true to your system at all times and in all markets, and you will come out a winner in the long run. Check out one of these 2 videos to continue down your path towards financial freedom. Remember, money is overrated, freedom is not. Thanks for watching, and I will see you here in the next one. Peace.